one warrior will stand.
No man should live in chains.
And an empire
I do not want your kingdom.
No? Then what?
will fall.
I want your head. Run from me, and I will follow you to hell.
And your name is?
Conan.
Conan. That's it?
How many names do I need?
Conan the Barbarian.
There is nothing wrong with your television. Do not attempt to adjust the picture. We are now controlling the transmission. We control the horizontal and the vertical. We can deluge you with 1,000 channels or expand one single image to crystal clarity and beyond. We can shape your vision to anything our imagination can conceive. For the next hour, we will control all that you see and hear. You are about to experience the awe and mystery which reaches from the deepest inner mind to the outer limits.
It's very creative, but sir, I just think it's a bad idea to name a product the Titanic.
Chapter 2, Systems Design, Job Order Costing. Managers need to assign costs to products to facilitate external financial reporting and internal decision-making. This chapter illustrates an absorption costing approach, also called a full cost approach, for calculating product costs known as job order costing. Learning objective number 1 is to distinguish between process costing and job order costing and identify companies that would use each costing method. Two costing systems are commonly used in manufacturing and many service companies: process costing and job order costing. A process cost system is best used by companies that produce many units of a single product, and where one unit of output is indistinguishable from any other unit of output. Because the units of output are identical, the company will probably use an average cost system to determine product cost. An example of a company that may consider a process cost system is Weyerhaeuser, a manufacturer of paper products. When we think of paper manufacturing, we generally think about continuous production of a single roll of paper that may eventually be cut into sizes needed by customers. Other companies that would benefit from process costing are Reynolds Aluminum and Coca-Cola. Certainly, the desire of all three of these companies is to make each unit of output consistent with the quality standards established. Coca-Cola bottled in California should taste identical to the same product bottled in New York City. A company would use a job order costing system when many different products are produced each period. The products are usually manufactured to customer specifications. The unique nature of each order requires tracing or allocating costs to each job and maintaining cost records for each job. Companies that may benefit from using job order cost systems include Boeing, Bechtel International, and Walt Disney Studios. Bechtel is probably the largest international construction company. The company works on huge projects that are unique to customer needs. This table presents an overview of the differences between a job order and process costing system. With job order costing, many jobs are worked on during the period. With process costing, a single product is produced for a long period of time. With job order costing, costs are accumulated by individual jobs. With process costing, costs are accumulated by departments. With job order costing, average unit costs are computed by job. With process costing, average unit costs are computed for a particular operation or by department. See if you can identify those types of companies that would benefit from the use of a job order cost system. There may be more than one company in the list. How did you do? The paper and ketchup manufacturers would probably use a process costing system rather than a job order system. In a job order costing system, direct materials and direct labor are both assigned to individual jobs on which the materials were used and the labor incurred. Manufacturing overhead includes indirect materials and indirect labor, as well as other manufacturing costs, like the power used to run the machinery in the factory. Manufacturing overhead cannot be traced directly to specific jobs. Rather, it is allocated to jobs on the basis of a predetermined rate. Overhead is applied to each job that's in process using the predetermined rate. We'll see how to calculate the rate in a few minutes. Learning objective number 2 is to identify the documents used in a job order costing system. The accounting department relies upon a job cost sheet for tracking the direct and indirect costs associated with a given job. Here is a job cost sheet for a hypothetical company called Pearco. A job number uniquely identifies each job. Direct material, direct labor, and manufacturing overhead costs are accumulated for each job. And the job cost sheet is a subsidiary ledger to the work in process account. Once a sales order has been received and a production order issued, the production department prepares a materials requisition form to specify the type, quantity, and total cost of materials, for example, $116, to be drawn from the storeroom, and the job number, for example, A143, to which the cost of the materials is to be charged. For an existing product, the production department can refer to a bill of materials to determine the type and quantity of each item of materials needed to complete a unit of product. The accounting department records the total direct material cost, for example, $116, on the appropriate job cost sheet. Notice that the material requisition number, for example, X76890, is included on the job cost sheet to provide easy access to the source document. Workers use time tickets to record the amount of time that they spent on each job and the total cost assigned to each job. We can see that on March 5th, I Am Skilled worked for 8 hours on job A143. The hourly pay rate is $11. So $88 of direct labor will be charged to our job, A143. Notice that the supervisor approves to the accuracy of the time ticket. The accounting department records the labor costs from the time tickets, for example, $88, onto the job cost sheet. Part 1. Manufacturing overhead is applied to all jobs that are in process. We apply overhead using a base, which we believe causes overhead costs to be incurred. Some companies allocate manufacturing overhead using direct labor hours, direct labor dollars, or machine hours. Part 2. We must allocate overhead costs to jobs for a variety of reasons. First, it is difficult, if not impossible, to actually trace overhead costs to a particular job. The cost of grease for machinery to manufacture our product is part of our manufacturing costs. It would be impossible to accurately trace the amount of grease consumed to manufacture 1 unit of output. Manufacturing overhead also includes a number of different costs, and it would be very difficult to gather all of them together in time to charge them to a particular job. A job may be complete and sold before we can determine the actual overhead costs incurred. Finally, many types of overhead are fixed in nature, even though output fluctuates during the period. Learning objective number 3 is to compute predetermined overhead rates and explain why estimated overhead costs, rather than actual overhead costs, are used in the costing process. To facilitate the allocation of manufacturing overhead to each job, we calculate a predetermined overhead rate before the period begins. The rate is calculated by dividing the total estimated amount of manufacturing overhead for the coming period by the estimated quantity of the allocation base for the coming period. For example, if our allocation base is machine hours, we would estimate the total number of machine hours used in production in the coming period. Ideally, the allocation base should be a cost driver. That is, it causes the overhead to be incurred. Predetermined overhead rates that rely on estimated data are often used because actual overhead costs for the period are not known until sometime after the end of the period, thereby inhibiting the ability to estimate job costs during the period. Actual overhead costs can fluctuate seasonally, thus misleading decision makers. Therefore, using a predetermined overhead rate simplifies record keeping. The predetermined overhead rate is calculated using a three-step process. We must estimate the level of production for the period. Next, we estimate the total amount of the allocation base in the denominator that would be required for that level of production. Finally, we estimate the total manufacturing overhead cost in the numerator that would be incurred for the estimated amount of the allocation base. So, the predetermined overhead rate is calculated by dividing Step 3 by Step 2. Manufacturing overhead is applied to jobs using the predetermined overhead rate multiplied by the actual amount of the allocation base used completing the job. This is called a normal costing system. For example, assume Pearco applies overhead to jobs based on direct labor hours and the estimated total overhead for the year is $640,000. If estimated total direct labor hours for the year is 160,000 hours, then Pearco's predetermined overhead rate is $4 per direct labor hour. On the job cost sheet, the amount of overhead that would be applied to the job cost sheet for job A143 is $32, 8 direct labor hours times $4 per hour. The total direct material, direct labor, and manufacturing overhead costs assigned to job A143 is $236. Since this particular job included 2 units of production, the average cost per unit is $118. The average unit cost should not be interpreted as the costs that would actually be incurred if another unit were produced. The fixed overhead would not change if another unit were produced, so the incremental cost of another unit is something less than $118. Job WR53 at NW Fab Inc. required $200 of direct materials and 10 direct labor hours at $15 per hour. Estimated total overhead for the year was $760,000, and estimated direct labor hours were 20,000. What would be recorded as the cost of job WR53? This problem may take a while to solve, but it will be well worth your time to complete the computations. The cost of job WR53 is $730. This consists of direct materials of $200, direct labor of $150, and manufacturing overhead of $380.
Category tonight from the Home Office, tax tips, top 10 tax tips. And here now, presenting tonight's top 10 list, top 10 area accountants. It's tax time, top 10 tax tips. Pay close attention. Here we go. Number 10, Ann Timney.
IRS deadlines are just suggestions.
Yeah.
File your taxes whenever you want.
Thank you very much, Ann. Ann Timney, ladies and gentlemen. Number 9, Mark Morrow.
Warlocks may not claim trolls as dependents.
Good. Excellent. Number 8, Joe Pagluca.
Make filing more personable by naming your calculator. Mine is named Owen.
Thank you. Thank you very much, Joe. Number 7, Phil DeFalco.
Make sure your accountant went to a real school and not a phony internet college like I did.
Okay, thank you, Phil. Number 6, Adele Valenzuela.
H black, good guy. R black, complete greaseball.
I didn't know that. Had no idea. Number 5, Harvey Tanton.
Getting a refund? Log on to the IRS.gov to spin the wheel and play Double or Nothing.
There you go. Number 4, Lawrence Spielman.
If you don't remember your social security number, make one up.
Make one up. Number 3, Richard Konigsberg.
Do not use Wesley Snipes' accountant.
Okay. Number 2, Arthur Drucker.
Not really a tax tip, but accountants are wild in the sack.
You want to borrow my cup? All right. And the number 1 tax tip, here's Doug Cohen.
Take it from me. Prison's not so bad.
Now let's look at the document flow in a job order cost system. The entire accounting process begins when a sales order is received from a customer. Once the sales order is received and approved, a production order is drafted to initiate work on a job. From the production order, we are able to determine the direct and indirect materials we will need to requisition from the storeroom. A materials requisition form is used to draw direct and indirect materials from the storeroom. We now know that the materials requisition form is a critical source document in the preparation of the job cost sheet. Direct materials costs are charged to specific jobs. Indirect material costs are included in manufacturing overhead. As employees work on the job covered by the production order, time tickets are prepared for recording both direct and indirect labor costs. Direct labor costs are charged to specific jobs. Indirect labor costs are included in manufacturing overhead. Indirect materials and indirect labor are parts of manufacturing overhead. Other overhead costs are charged to the manufacturing overhead account, as incurred. The predetermined overhead rate is used to apply manufacturing overhead costs to jobs. Learning objective number 4 is to prepare journal entries to record costs in a job order costing system. Learning objective number 7 is to use T accounts to show the flow of costs in a job order costing system. Now, let's examine the transactions in T account and journal entry form that capture the flow of costs in a job order costing system. Part 1. Here is a T account approach to looking at the cost flows in a job order cost system. When raw materials are purchased, they are debited to the raw materials inventory account and credited to accounts payable, not shown. Part 2. The cost of direct material requisitions is debited to work in process and added to the job cost sheet, which serves as a subsidiary ledger. Part 3. The manufacturing overhead account is debited, and the raw materials inventory is credited for the indirect materials used. Here is an example of the general journal entry to record the purchase of raw materials on account. We debit raw materials and credit accounts payable. When materials are requisitioned from raw materials inventory, we debit work in process, job cost sheet for direct materials, and we debit manufacturing overhead for indirect materials. Part 1. Wages and salaries are initially recorded in a payable account. Part 2. Direct labor is charged to work in process inventory through the job cost sheet. Indirect labor is charged to manufacturing overhead. Here is an example of the entry to charge direct and indirect labor to the work in process inventory account and the manufacturing overhead account. other actual manufacturing overhead costs are debited to manufacturing overhead. The credit side of the entry is the various liability accounts. For example, accounts payable and property taxes payable. Prepaid asset accounts, for example, prepaid insurance, and contra asset accounts, for example, accumulated depreciation. This journal entry represents the accumulation of other actual overhead amounts, like property taxes on the manufacturing plant, insurance on the plant structure, and depreciation of manufacturing assets. Manufacturing overhead is debited and various other accounts are credited, as shown. Learning objective number 5 is to apply overhead cost to work in process using a predetermined overhead rate. Manufacturing overhead is applied to each job in work in process inventory by debiting work in process and crediting manufacturing overhead for the amount of applied overhead based on the predetermined overhead rate. Actual manufacturing overhead costs are not debited to work in process, nor are they charged to jobs via the job cost sheets. The manufacturing overhead account is a clearing account. The actual amount of overhead incurred during the period, debit side of the account, will not be equal to the amount applied to the work in process account, credit side of the account. Any variance between actual and applied will be accounted for as a year-end adjusting entry, which will be discussed shortly. Recording applied overhead requires a debit to work in process and a credit to manufacturing overhead. We previously discussed the treatment of selling and administrative salaries expense during the period. Other non-manufacturing costs are charged as expense in the period incurred. Companies that use job order cost systems to assign manufacturing costs to products also incur non-manufacturing costs. Non-manufacturing costs should not go into the manufacturing overhead account. Non-manufacturing costs are not assigned to individual jobs. Rather, they are expensed in the period incurred. For example, the salary expense for employees that work in a selling or administrative capacity are expensed in the period incurred, and advertising expenses are expensed in the period incurred. This journal entry illustrates the expensing of non-manufacturing costs in the current period. The sum of all amounts transferred from work in process to finished goods represents the cost of goods manufactured for the period. The work in process account is credited and the finished goods account is debited. The transfer is accomplished with a debit to finished goods inventory and a credit to work in process inventory. Learning objective number 6 is to prepare schedules of cost of goods manufactured and cost of goods sold. When a finished job is sold to the customer, the cost of that job is transferred from finished goods inventory to cost of goods sold. Recall that cost of goods sold is an income statement account. If only a portion of the units associated with a particular job are shipped, then the unit cost figure from the job cost sheet is used to determine the amount of the journal entry. Assuming the company uses a perpetual inventory system, 2 journal entries are required to record the sale. The first entry is to debit either accounts receivable or cash and credit sales for the selling price of the job completed. The second entry is to debit cost of goods sold and credit finished goods inventory for the cost incurred to complete the job. The difference between the selling price and cost is the company's gross margin on the job. Learning objective number 8 is to compute underapplied or overapplied overhead cost and prepare the journal entry to close the balance in manufacturing overhead to the appropriate accounts. There are 2 complications relating to overhead application: defining and computing underapplied and overapplied overhead. When we apply overhead on the basis of a predetermined overhead rate, there is always the chance that the amount of overhead applied will be different from the amount of overhead actually incurred during the period. When there is a difference, we refer to the amount as either underapplied overhead or overapplied overhead. Underapplied overhead exists when the amount of overhead applied to jobs during the period using the predetermined overhead rate is less than the total amount of overhead actually incurred during the period. Over-applied overhead exists when the amount of overhead applied to jobs during the period using the predetermined overhead rate is greater than the total amount of overhead actually incurred during the period. Part 1. Let's assume that Perco incurred actual overhead of $650,000 during the period and worked a total of 170,000 direct labor hours. Recall that Perco applies overhead at the rate of $4 per direct labor hour worked. How much overhead did Perco apply to jobs during the period? Part 2. Perco would have applied $680,000 of overhead during the period. That is $4 per direct labor hour times the 170,000 direct labor hours actually worked. Can you see our problem? The difference between the overhead cost applied to work in process and the actual overhead costs of a period is termed either underapplied or overapplied overhead. Perco incurred actual overhead of $650,000 and applied $680,000. So the company overapplied $30,000 of overhead for the year. How do we dispose of this overapplied overhead? Tiger, Inc. had actual manufacturing overhead costs of $1,210,000 and a predetermined overhead rate of $4 per machine hour. Tiger, Inc. worked 290,000 machine hours during the period. What is Tiger's over or underapplied overhead? Tiger, Inc. has underapplied overhead of $50,000. Part 1. The simplest way to account for any remaining balance in the manufacturing overhead account is to close it out to cost of goods sold. Part 2. The journal entry, in T-account form, to close out Perco's $30,000 of overapplied overhead into cost of goods sold would be to debit manufacturing overhead and credit cost of goods sold. What effect will the adjustment of the overapplied overhead have on Perco's net operating income? How did you do? Net operating income will increase. This is because cost of goods sold was reduced for the overapplied overhead, which results in an increase in gross profit and thus an increase in net operating income. Part 1. We have assumed that the company has used one single predetermined overhead rate for the entire factory. Such a rate is called a plant-wide overhead rate. Part 2. In larger companies, multiple predetermined overhead rates are often used. For example, each production department may have its own predetermined overhead rate. Part 3. Using multiple predetermined overhead rates is more complex. Part 4. When a company uses multiple rates, it promotes greater accuracy in the allocation process because it provides recognition to differences across departments in how overhead costs are incurred. Although our attention is focused on manufacturing applications, it bears re-emphasizing that job order costing is also used in services industries. For example, in a law firm, each client represents a job. Legal forms and similar inputs represent direct materials. The time expended by attorneys represents direct labor. The costs of secretaries, clerks, rent, depreciation, and so forth represent the overhead. End of Chapter 2.
When I grow up, I want to be in advertising.
Forced to work 10 hours a day.
12 hours a day. 14 hours a day.
I want to work like a dog and bust my ass for a $1,200 account just to be told the client has a better idea.
When I grow up, I want to be an account executive for Fox 14.
KNOE. Comcast Spotlight.
KAQY. I want to sit in boring meetings every freaking morning and contribute absolutely nothing. I want to do the hokey pokey for corporate.
When I grow up, I want to be a media director.
A buyer.
A gopher. A creative director who also fetches coffee.
A graphic artist wishing I had a Mac.
A freak. I want to use terms nobody understands.
And convince myself that I'm no longer a geek like I was in high school. I want to pitch new businesses.
Complete complicated spec ads.
And not get paid a damn dime for any of it.
Whenever I grow up.
When I grow up,
I want to be a copywriter.
a hack.
An egomaniac.
The next star of advertising.
When I grow up, I want to be an art director.
Wear black clothes and hide my tax.
Pierce my eyebrow and be the ad club secretary.
I want to have a hair trigger temper.
Tell people what to do.
When I grow up, I want to be a station manager and worry every day if corporate's going to fire me.
I want to be a Comcast strip cable man.
I want to be a consultant.
A specialty expert who sells whatchamacallits and thingamajigs.
Making contacts who hate to see me coming.
A videographer.
Kiss up.
A yes man.
A yes woman. Wear short skirts.
I want to own my own agency and everyone who works for me.
With my name on my desk.
With my name on the door.
With my name tag going around my neck.
When I grow up, I want to be in advertising and have big budgets. Have no budgets. Be French.
Be able to bitch just like Bill Lee.
I want to be a star in the printing businesses.
A star in the newspaper ad game.
A star in the Gridiron Show.
When I grow up,
I want to be an ad guru who takes home the glass globe.
I want to win an Addy.
And be the envy of all my friends.
Both of them.
Whenever I grow up, I want to be in advertising.
In the ad club of Northeast Louisiana.